Welcome back. This is Open Exchange. We're coming to you live from CNBC-TV18 Motilal Oswal studio. Well, as promised, let's get chatting with the management of Hindalco. The numbers are quite good. The India business numbers look strong. Aluminium business improved sequentially as well, while the debt reduced a bit. Mr. Satish Pai, the MD at Hindalco, joins us to discuss the past quarter's numbers and the way ahead. Hi, Mr. Pai. Good morning. Thanks so much for joining us. Well, the aluminium business has improved on a sequential basis. But how much can it improve in the quarter four in comparison to what we have seen in quarter three?
So as you said, the Q3 to Q2 performance has certainly improved in the upstream business and the downstream. On the upstream side, it improved because coal availability and coal costs started to come down. In fact, coal costs came down by about 20% sequentially. And we are expecting that in Q4, you will see another 10-15% improvement, which is a large part of our cost base. So you will see the $555 per ton that you said on the upstream side certainly improving quite a lot. Now you have to remember that besides the cost, the LME is also starting to trend up. In Q3, the average LME was $2,300 odd per ton, and we are currently sort of mid-February averaging more than $2,500 per ton. So I think the upstream business in India is going to see quite a sharp improvement in Q4 over Q3. The downstream businesses are also doing well. The Indian demand is holding out very strong. On the consumer side, consumer durables, it was a little bit weak during Q3 because the demand was not as strong as the Diwali during COVID time. But we are confident that in Q4, the destocking is complete. So the downstream also should see a very strong quarter.
Mr. Pai, I can't let you go at that. What about the upstream aluminium EBITDA per ton? You said it's going to improve. The coal savings are going to be there, higher LME prices. Can we see the upstream aluminium business move to around $750 to $800 per ton in comparison to the $550 that we saw in the past quarter?
I think you do the calculation even better than our people. So yes.
Okay, all right. $750 to $800 at least is what we're going to see. Let's shift focus to the copper business. Mr. Pai, we have been talking from the time the copper business was around 250 to 300 crores per quarter. Now it's moved to around 550 crores per quarter on a better sales mix. What's the run rate we look at here? Copper EBITDA per quarter?
No, I think that fundamentally, I just wanted to take a minute to say that the copper business is performing so well because we have stabilized the operations. We had to invest a lot of money to fix things on the environmental side. So the operations of the copper smelter, the copper rods, mills are actually very stable. And when you run stable operations in manufacturing, you tend to see these good financial results. So I would say that the copper business goes up and down a little bit with the price of sulfuric acid, which is a large driver. But it would be safe to say that now our sort of trending rate is more like 450 to 500 going forward.
So on Novelis particularly, it was disappointing in this quarter, in Q3, but will it improve? And if yes, to what levels in Q4? Also, when does it start going back to, say, $500 per ton?
So I think, we have been communicating that in Q4, you will start to see an EBITDA which starts with a 4. And I think that, we'll get back to the 500s in the latter half of the next financial year. So that's the point. Now, but it's important to understand a little bit what has happened in the market. I mean, on one hand, you had a lot of the customers that build up inventory. So there is a destocking going on that will be completed probably by Q4. But on the other hand, freight rates have improved. The energy prices, because the winter was not so severe, the energy prices in Europe have moderated. So we are fairly confident that Novelis will have a much better Q4 compared to a Q3. And we'll get back to that 500 plus EBITDA per ton by the second half of next year.
Got that guidance. So can you talk about free cash flows? They were negative at $170 million in Q3, but you're guiding for positive free cash flow in FY23. Could you explain that to us?
There are negative 170 odd million. What's going to happen in Q4 is that you're going to get quite a large working capital release. The amount of capex that we were planning to spend will not happen. So, and the EBITDA will be much higher. So I think as a combination of these three, you will see a positive cash flow number in Q4.
Okay, positive cash flow number in Q4. So for FY23 as a whole, is it fair to assume that the free cash flows will be around $400 million, or could it get better?
Yeah, that's what we have communicated.
Okay, so $400 million as far as the free cash flow is concerned. Got that. What is the guidance that you're giving out in terms of both capex as well as debt for the company for the full year?
So I think the first thing to be clear is that our debt now, we have finished in India paying about 8,500 crores in the first 9 months we have repaid. The net debt to EBITDA in India is 0.26. The overall net debt to EBITDA is 2.6 because Novelis EBITDA went down. The debt, I think, they are largely bonds that we have refinanced with very low coupon rates. So I think next year, the net debt to EBITDA, our target is to keep it in those mid twos. And as the EBITDA of Novelis goes up, we should be able to do that. The net debt to EBITDA in India will remain below 1 because we are down to about a net debt of only 3,000 crores in India. So our balance sheet in India is quite clean.
Mr. Pai, one final question. Since you are comfortable with the balance sheet position right now, any inorganic growth plans, particularly any update on Hindustan Copper?
Yeah, I think that first, fair to say that most of our growth is going to be organic going forward. And I think that because of the strength of our balance sheet, most of the cash we generate, we are going to put back into capex. So both for Novelis as well as Hindalco India, I think that, by the end of March, we'll finalize the plan and announce the capex for next year. But we have fairly aggressive capex plans with the cash we generate. And most of that growth is going to be organic. I think inorganic opportunities, including the one you mentioned, we'll just have to wait and see when they come, and then we'll take a look at it if it makes sense.
Always good speaking to you, Mr. Pai. So the aluminium upstream business moves to around $750 to around $800 per ton. Novelis goes back to around $400 per ton in the coming quarter and then scales to around $500 per ton. And in case things come up, like in terms of an inorganic growth, then maybe Hindustan Copper is what you look at. For the time being, organic growth is what you're satisfied with. Gurmeet Chadda is still with us. Hi, Gurmeet. Thanks so much for waiting by. You heard that conversation, I'm guessing, with Hindalco. They're sounding optimistic on the future. But what's your take on Hindalco? Do you have a preference to the ferrous space, or would you like to avoid it altogether?
No, it's there in our coverage and watch list more tactically, Nigel, because you have to take it quarter by quarter. That's the nature of the business. But what I liked is they while they withdrew the short-term guidance on the end user industries, they have maintained the long-term guidance. So, for example, on cans, which is beverage cans, which saw some destocking post-COVID, they're maintaining like 4% kind of a demand. Auto is like close to about 11%, and then you have this entire specialty products where they are maintaining. So, and also very reasonable valuations, I think 5-6 times EV by EBITDA, which is fairly, reasonable. So something which is more structural, which I like, is Mukan. Probably the impact will come in next quarter because the land sale proceeds came in Jan, so may not get reflected in the numbers coming next week. But that's a more ownership change with Bajaj Group at 74% stake, turnover going up to 6,000 crores. Almost 1,800 crores of debt getting reduced, and very, very, very strong player in specialty and alloy steel. So that is something we have more for medium term. Tata Steel, Hindalco are more tactical for us in our coverage.
Okay, by the way, in pre-opening, some very interesting moves on individual stocks. Zomato is down 3% on the back of perhaps the net loss. Just net loss on the bottom line has gone up. So it's about 350 crores of loss versus a loss of 250 crores last quarter. So I guess that is a bit of a disappointment. The stock is down about 3%. Adani Enterprises, Adani Total Gas, Adani Transmission are all under pressure as the MSCI will be reducing weightage over there. So it all down about 8 to 10%. And on the upside, you have something like an MTAR Tech, HPCL and Sula Vineyards that are looking pretty good. So keep an eye out on those stocks. But, it's interesting. I mean, I know you did say, Gurmeet, a while back that you would want to see some conclusive evidence of a pickup in profitability for Zomato, right, before taking a call over there. Is that your view across the board on these new age tech companies? Paytm has displayed some level of profitability, Nykaa as well. So what would you do with the rest of the pack now? And also on Zomato, after this 3% fall, what is your view?
So, Sonia, we are tracking even Paytm, and I think if you see Paytm's focus on profitability is largely led by lending. So they did like 7,000 crores in Q2 this quarter. They almost did 10,000 crores. And if you see the take rate, that's where they make money. 2.5 to 3.5% they make upfront on these loans. Payments is about 7 to 9 bips, and you will not see them talking much about GMVs now, which was largely payment driven kind of a platform. They also make decent money on insurance, the active device, merchant active devices, subscription fee plus the ability to cross sell. My worry on lending is that again 50% of the lending is this buy now pay later, which they call Paytm postpaid, where ticket sizes are small and delinquencies could be higher. So you probably have to see one full credit cycle. But between the two, because financial products have a higher impact, I think it's a relatively better place. But in general, as I said, I would avoid. There are so many opportunities. I look at the thrashing pharma stocks have got most of the names. Even in some of the banks, I think there's too much excessive concern on systemic risk, which I think is a little overblown right now. So there are other opportunities, and in this market, it has to be risk-adjusted returns. And this is the point I've been making for some time.
Gurmeet, we'll leave it at that. Thank you very much for joining in. By the way, the print across Asia is weakening now. Hang Seng is down nearly 2%. It's a 1.8% cut coming in on the Hong Kong Stock Exchange. The Korean markets, Kospi is down close to about 1%. The Sensex Nifty is also mirroring the weakness that we are seeing across Asian markets this morning, currently down close to about 0.5%. 3 minutes to go for the opening rates to kick in. Let's get Mitesh Thakkar in and get in some 9-10 calls. Mitesh?
I'll go with the buy on Infosys. Keep a stop below 1594. Look for targets of 1650.
Okay, buy on Infosys. Thanks, Mitesh, for that. Well, Voltas is one stock that's under pressure after a very weak set of numbers that the company has reported this time around. The EBITDA has halved. It's down 50%. Vaishta is here to tell us the latest on that. Vaishta, over to you.
Hi, Sonia. You're absolutely right. Voltas, another yet weak quarter for the company. Revenue is up 12%, but margins dipped to 3.8% versus 8.8% in the same quarter of last year. And due to 137 crore of provisions made on the overseas projects, the bottom line has turned loss-making. Now, moving on to Voltas's biggest segment, which is the unitary cooling products division. Given that Q3 is anyways a lean season for the cooling products, the revenues from the segment have grown by meager 11%, which is to be compared with its peer Blue Star's UCP products division, which has grown by 15%. That's point number one. Point number two, another negative has been the fall in the UCP segment profitability by 13% on a year-on-year basis. Point number three, room AC market share. The company has yet again not been able to forget about growing market share, but they've not been successful even in maintaining its existing market share and has come in at 22.5%, which is to be compared with 25.9% in December 2021. Fourth point has been the electromechanical projects and services segment, which has turned loss-making in this quarter of 46 crores. All in all, I see more negatives in the stock than positives, and hence the stock could witness some selling pressure in the stock. Back to you.
All right, well summarized. Vaishta, thanks so much for joining and giving us that quick update. Mangalam, squeeze in Zomato. How are those numbers? I think the stock is opening up on the back foot.
Well, Zomato numbers largely were mixed, but there were more positives than negatives, I would say. The revenues in the food delivery business, mildly softer. That's because consumer sentiment was weak post-Diwali. However, the operational performance in the food business was good. 23 crores is the EBITDA that they posted as against 2 crores at the same time last quarter. What's growing for them is Blinkit, but then again, that are widening losses out there. The company believes that this can improve going forward. So those are a couple of things I'll be watching out for. Most importantly, management's commitment to staying EBITDA positive by the second quarter of FY24 too.
All right, thanks a lot, Mangalam, for that. That'll be the big mover this morning. It looks like it's going to open on the downside. So is the market, by the way. The Nifty is down about 45 points in pre-opening. The Adani Group stocks are taking it on the chin. So that's the first stick that you're seeing on the index. As expected, Adani Enterprises down 10%. Adani Ports down about 3% So all of the stocks where there's going to be some MSCI adjustment, those stocks are under pressure. So is the market, by the way. The Sensex is down 150 points. The Nifty down about 50-odd points. The advanced decline ratio is split right down the middle, but it could go either way. So just keep that on your radar as well. The Bank Nifty is very quiet right now, absolutely flat. Apart from the Adani Group stocks, it's IT that's exerting some pressure this morning. HCL Tech, Infosys, Tech Mahindra, Wipro, TCS, all down anywhere between 0.5% to 1.5%. Even, steel companies, Tata Steel is down about 0.6% as well. In fact, metal on the whole. Reliance is under a bit of pressure, dragging its feet down about 0.3%. On the upside, what's holding up is UPL. M&M has signed an MOU with the Telangana government for some orders there. So M&M is up in the green. It also comes out with numbers later today. So that's reacting well. Sun Pharma, Axis Bank, Bharti, Britannia, Cipla. So it's a defensive move this morning. FMCG as well as Pharma doing well. Hero MotoCorp, Maruti are bouncing back just a tad bit. It's clearly the Adani Group stocks that are, dragging the markets overall. And in the broader markets, by the way, Paytm is coming in for some big profit taking as well. So 6% lower on Paytm and Zomato taking a knock, down 4.5%. So some unwinding of positions is what we're seeing.
Well, that's right, Sonia. In terms of stocks that are taking a bit of a knock from the F&O pack, you have Voltas that's down close to around 3%. Margins disappointing. They're losing market share as well, or they're not gaining at least. So that stock is down close to around 2%, but it's come off the day's low. United Breweries, let's see how that one's reacting. The EBITDA number was the disappointment. It came down by close to around 50%, and margins did compress by close to around 600 basis points. So that's opened up with a cut of close to around 3.5%. Lupin, well, the quarter 3 margins were at 5-quarter highs. Maybe the street was expecting more, because that stock, in fact, has opened up with a cut of close to around 5%. But on the flip side, you have Oro Pharma that's opened up with solid gains. Well, that's sitting with a gain of close to around 3% odd. The operational performance was good, and they've transferred one of their businesses as well. So the street has read all of that positively. And, Ekta told us that the con call was pretty okay as well. So, that explains why the stock is higher. Suzlon came out with a set of numbers in the final hour of trade. Small stock, there was an operational improvement. I think that one opened up with a gain of close to around 4%. So let's pull up Suzlon as well. But we have come off the day's low. It seems, at least for the time being, the market is in buy on dips mode. 17,770. Very important on the downside. For the time being, buy on dips has worked.
But the opening is not as bad as what the SGX
Absolutely.
Nifty was suggesting, right? Currently, the Nifty is down 25 points. The SGX Nifty was suggesting a nearly 100-point knock. So compared to that, and compared to the weakness that we are seeing across the rest of the Asian market, the opening is not very bad. It's a fractional cut being witnessed on the benchmark indices. Some more stocks which catch your attention in the broader market. MTAR Tech, very strong numbers, profits up 138%. Their order inflows have gone up 40% on a year-on-year basis. The stock has gained nearly 4%. Axo Nobel India, margins have improved by 50 basis points year-on-year. The stock has moved up. MSCI, the India index, has added CG Power, so that's fueling a rally in CG Power. So that's gained nearly 4%. The street is expecting inflows to come through. Some more stocks reacting to earnings. LIC on the way up. Sula, steady quarter. Typically, Q3 is the best quarter for Sula. And this time, we've seen about a 15-16% top line as well as bottom line. Okay, some more information coming through on Paytm. Remember, Sonia was saying that early in the morning, we've seen a big knock in the Paytm share prices. We understand that there has been a 2 crore block deal taking place in Paytm. So just pull that up. The price is not known, but remember, Paytm stock price rallied nearly 200 rupees in a span of a couple of days. The stock price was about 520 pre-numbers. It rallied to more than 700. But today, on the back of that block deal, you are seeing some selling coming through. Profit booking also, because its peer Zomato is a bit subdued in trade post numbers. But Paytm, block deal, and perhaps just some profit booking, a pause, right?
Absolutely.
After the
There's, I think, 0.1% equity has changed, and 2.1 crores has, there's a huge block deal that has happened at Paytm. So keep that on your radar. And let's get our market master on board as well, because for now, the market is subdued. It's down almost about 45, 50 odd points. 17,900 is a bit of a resistance for the market. At least that's what it seems like for now. The Bank Nifty is the one that's down about 30 odd points. Harsha Upadhyay, CIO Equity at Kotak Mutual Fund, joins us now to talk about that. Harsha, good morning and thanks for joining us on the show. First, before asking you your view on the market, I wanted your view on how to approach these new age tech companies. It's a bit unpredictable, right? The show over there, because there are some that are on a path to profitability, some that look like they could be. But as an investor, how do you approach this space?
Good morning, Sonia. Clearly, this is not a homogeneous space, I would say. The valuations were definitely on the higher side when we started looking at some of these companies post-listing. And we also did see a global tech sector correcting a bit. And then in the past few months, we have seen a pullback in the global tech indices. So all of this has added to volatility in our internet companies as well. While the stock prices are much lower than where they got listed or where they started trading initially. The point here is one needs to evaluate all of these businesses on a bottom-up basis and see where is the path to profitability. Is it near in the near term, or it's in the medium to long term? I think if it is very long-term based path to profitability, then I think the volatility will remain high in such internet companies, given that the markets will also keep seeing cycles and you will keep seeing volatility driven by what's happening in the external environment. And another thing to note across many of these internet companies is the fact that there are many strategic investors and private equity investors who could be looking to exit at various points of time. So that is definitely a technical overhang that one needs to consider before investing in.
Okay. By the way, Harsh, just hold on to that thought. Paytm, it appears, there are that there is a larger number of trades that have got, have changed hands. Remember, for the last few days, Nimesh has been alerting us that there's likely to be a large trade out there, and one of those parties out there could be a seller. So let's see whether or not that happens. Nimesh will join in and just tell us in a bit. But that could explain why the stock is down close to around 5%. How much of it is done and how much of it is pending is something that we'll be looking forward to. But Harsha, good to hear your opinion on these new age companies. What about the IT stocks? They have actually bounced well from the recent lows. But now how much of that, the recovery is already priced in? Would you look at them now, or do you believe there's still a spot of bother? Valuation-wise, well, they're not very cheap. And the globe could hit a recessionary phase. So in that sort of a backdrop, your approach?
Nigel, we don't have a great overweight stance on IT sector as of now. It will be a bit of an underweight or a neutral at this point of time, and our preference is for large cap IT companies. As you mentioned clearly, the global growth seems still a question mark. So in that scenario, what happens to 2023 IT discretionary budget is something that we need to see, and that's what is going to get executed over the next 12-18 months. So from that perspective, we could still see a bit of issues on the business side, while valuations have seen kind of a decent correction. So to that extent, I would say that there is probably no valuation risk there. But the question is about when do you see global growth recovering and helping business momentum.
Harsha, morning. What are the notable trends that you've picked up on consumption this time from the earnings season? And does it change your portfolio allocation in any way?
Rima, clearly that's one of the areas where we have seen significant hits in terms of margins as well as how they have delivered profits vis-a-vis expectations. I think the entire consumer discretionary part has kind of disappointed the markets. While something was expected, because not every company was expected to improve its margins or improve its overall growth. But I think the actual delivery has been much lower than the expectations. And it's still baffling to us how sharply we have seen urban discretionary consumption going down across many segments in the last few months post festive season. So it remains to be seen what happens in terms of recovery in urban consumption. Whereas on the rural consumption, we kind of becoming constructive at this point of time. We believe that over the next 6 to 12 months, we could see revival in rural consumption. And that should also come at a point of time where the margins should improve for most of these companies, given how commodity prices have been moderating over the last couple of months. So overall, I think maybe if you are a patient investor, there is money to be made in this segment. But I think the immediate short term is still going to be a question mark for consumer discretionary.
Okay, by the way, this market is in a mood to punish a lot of weak numbers. So Zomato is now down almost about 6% and huge volumes being traded on Zomato this morning. It's clearly the biggest volume buzzer on the downside. Paytm on the back of the block is down about 4% Lupin is down 4.5% despite numbers being largely in line with estimates. It was only the profits that were below street estimates. Despite that, Lupin is down. United Breweries and Voltas, a couple of other stocks that have disappointed on numbers, and both those names are in the red. And Brigade Enterprises also down almost about 2.5%. We'll have a chat with the management in just a bit as well. Harsha, what do you do with some of these names? I mean, if you look at the consumption space on the whole, there's been a clear slowdown this time around. Whether you talk about the HULs of the world, whether you talk about Asian Paints, a lot of the consumer durable companies have indicated a slowdown. Voltas, they've halved their EBITDA. Are you noticing any trend here? And if yes, what would it be? And from an investment standpoint, what do you do?
Yeah, clearly, the entire consumer discretionary pack, as I discussed earlier, is showing margin pressure, as well as the growth has not been up to expectations. Things are still not very clear in terms of how growth is going to revive immediately. So from that perspective, I think next couple of quarters could still be kind of muted. And also another point to remember here is most of these consumer discretionary stocks are at a valuation which are much higher than the market multiples. So to that extent, in a richly valued sector, if there are growth disappointments or margin disappointments, then there could be a significant fall in stock prices or underperformance against the index. So to that extent, immediate short term looks difficult for consumer discretionary space. However, if you are a patient investor, maybe the volatility that you're going to see over the next couple of quarters could be the time to really look at adding some of these names, because these are all really good businesses which have compounded earnings over a period of time. Yes, today they are in a spot, but those issues should gradually improve. For example, the margin story should improve quite a bit. And also we expect growth to revive at some point of time during the year. So maybe there is a time to build some of these positions as you go ahead if volatility continues.
Harsha, you said you're baffled by the extent of slowdown that we've seen in urban consumption, urban consumer discretionary. What explains this kind of decline? Is it just inflation? Is it just pent-up demand, which is now spent demand?
Difficult to say at this point of time, but clearly I think a large part of demand that we saw during festive season or in the run-up to festive season was probably a kind of pent-up demand as the market was reopening after COVID disruption, looks like. Because there is no other reason which can explain the kind of slowdown that we have seen post-festive season. If that is the case, maybe at some point of time it should get readjusted and we should come back to normal growth scenario. That's what we hope. Over the next few quarters, we should see some amount of revival in consumer discretionary as well.
Okay, all right, Harsha, always good hearing your thoughts. Thanks so much for stopping by and giving us your view on a whole host of sectors that we just discussed. Well, by the way, the Nifty Bank, that's going to be the joker in the pack today, because that's been a relative underperformer for the last two sessions. And as we speak from the day's low, well, it's recovered quite a bit. Just pull up the intraday chart there. The Nifty Bank, that's up close to around 40 points. That's a good 150 points of the low point of the day. And that needs to back today for the bulls if you have to go ahead and cross the 20 DMA on the Nifty as well as the 100 DMA. So those are the crucial levels that we're looking at as well. Well, I think we have a couple of managements that are waiting by. So let's get straight to that. Yeah, I think we can move on. Real estate major Brigade, well, they posted a good set of numbers. The sales volume has increased by close to around 41%. The 9 months collections as well are up by close to around 30%. The company's debt as well has reduced significantly. So put it all together, well, it's looking quite good. Pavitra Shankar, the MD of the company, joins us on the show. Hi, Pavitra. Congratulations on a good showing. Well, I was wondering whether or not there was any kind of miss in the numbers, but going by the face of it, it's looking quite good. So let's talk about numbers then. How has Q4 been in terms of traction? We're almost halfway through the Q4. And what do you end this year with in terms of sales, in terms of collections?
Hi, thank you. Thanks for having me on here. And yes, we're pretty happy with how Q3 has turned out. Operationally, the numbers are very good. And we actually continue to see this trend continue for Q4. Both in terms of residential, we've actually had a number of launches currently ongoing. So a lot of the launches that we were expecting earlier in the year are coming in into Q4. So we're quite happy with that. So I think we're right on track to have an extremely good quarter. Hopefully, it should be our best one ever in terms of residential sales. Office leasing as well is going along. We do have mostly non-SEZ space, SEZ space. So in terms of leasing, that continues to be a bit of a challenge, but we have a good pipeline. All our buildings are quality developments. Retail and hospitality are doing extremely well. Hospitality's had a fantastic quarter, and we hope that will continue for the rest of the financial year.
Okay. Pavitra, hi, good morning. It's great to hear that. Q4 should be your best one ever in terms of residential sales. It is a dream run, right, that the real estate companies are looking at right now after many, many years of a slowdown. Tell me, in terms of realizations, are you expecting a better performance? I mean, in this quarter, you've done almost 6,600 rupees a square foot. Are prices moving up, and hence can you do better in terms of realizations in the quarters to come?
Yes, actually, we are seeing pretty good demand on the ground, which is very heartening despite, any increases in the repo rate, which I know has been on everybody's minds. Despite that, customers are really looking for new launches. We're able to take up prices during the launch phase itself, which is a really good sign. For our own realization, we have seen it come up. We have been launching plotted development projects. So from that aspect, there could be, a slight averaging down because plotted projects realization isn't as high. And as we see more inventory come on from Chennai, which we're hoping to see in the next 4 quarters towards the end of next financial year, that should also bump up our average realization. But overall, we are taking price increases wherever possible, and it is supported by demand on the street.
I think the residential part of the Chennai project was to launch in Q2 of FY24, right? Are you pushing it forward?
No, I said at the end of Q2, at the end of FY24 is what we're pushing for. We'll have to see if it comes through. There have been some of the approvals have taken a little longer, but that's okay. I mean, we just need to get the right kind of product out there. So that will not come in Q2, but hopefully towards the end of FY24.
Got that. Pavitra, mortgage rates are now hitting 9.5% if you take into account the latest repo rate hike. When we'd spoken to a lot of real estate companies in the past, they had indicated the threshold was 9%. After that, demand starts slowing down. It starts pinching people who are taking EMI. Do you foresee in the next 12 months that mortgage rates above 9%, 9.5% is going to slow down things?
We'll have to see how it goes. Obviously, we're keeping an eye on it, but so far there hasn't been an indication of a slowdown. I mean, any sensitivity to even the ramp up from where we were, sub 8s, 6s, 7s, despite having seen all that increase in rates over the last year or so, we haven't really seen any change in the demand. I think there really is, a structural change finally in the residential cycle. We have been due for this upcycle. There's been a lot of demand that has just been sitting on the sidelines. A lot of the new projects are actually right-sized to the kind of demand to the kind of preferences that customers have. So I think it should still be quite good. There's been consolidation in the industry as well. So I think the quality of the product that is coming out there and the ticket sizes, all of that is just hitting the market at the right spot. So given that, some customers still always go for home loans. Many of them don't opt for it at all. So we don't see it impacting just yet, but we will continue to keep an eye on it.
In terms of guidance for new launches, you were looking at about 12 to 15 million square feet of new launches in the next 12 months. Is that the annual run rate that you're going with, or would you have any change in the plan?
I mean, we'd love to have, that kind of number every year. But,
Sure.
when you're looking for land, it's difficult to sort of say that you will exactly hit those numbers. So we are aggressive on the land front, both in Bangalore, Chennai, and Hyderabad, whether it is across plotted or mid-segment residential housing. The 12 to 13 million number was like a full number, assuming all of our Chennai launches hit during the next financial year. We could see some delays on that front. But apart from that, I think we are still aggressively looking to grow our top line, substantially year on year for the next few years. We think it is the right time for the residential sector.
Okay, that's on residential. What about the hotels? You said that you've added 2 hotels which could, aid your realizations. Have those hotels broken even, and what is the expectation in terms of the occupancy there, since the industry is picking up in a big way?
Yes, we have 8 hotels today. We're actually taking up capex on 1 more in Mysore. So we do see the newer hotels that have come on board, they are increasing their occupancy. Overall, we've had a very good quarter, in Q3, and we continue to see the same, whether it is in terms of F&B banquets or meetings and conventions and so on. So in terms of occupancy, we're above 60%, 65%, which is more than pre-COVID levels as well. And all of the realizations, the ARRs across all the hotels are all pre-COVID levels as well. So despite all our hotels being business hotels, which was sort of a challenge during COVID, most hotels doing well at that time were resorts. So I think now is the time for business hotels with domestic and international travel coming back. So we're quite confident of having a very good year for the hotels as well.
What could Q4 occupancy look like? In Q3, it was 68% for the hospitality business. Does that number inch up? And what about the ARR, the average room rent?
Yes, we think it should increase a little bit, especially in our Bangalore hotels. There's a lot of conventions and the air show that happens, the aero show that happens in February as well. So due to that, I think our Bangalore hotels will do much better.
Okay, all the best. Thanks a lot, Pavitra, for joining in, and have a great FY23. We'll, of course, touch base with you again. That's Brigade Enterprises saying that Q4 will be their best ever quarter for residential sales. That's how strong demand is at the moment. But we're not done with our real estate discussion just yet. We have another player joining us in just a bit. But let's take a break before we do that. As we take the break, we'd like to once again thank our viewers. We have beaten all competition.